Good afternoon, traders. John Caruso coming to you here for the afternoon of September 13th. I'm sitting here with Bob Haberkorn as well as Jeff Friedman. Today was FOMC day. We're here to kind of discuss that and see how the markets reacted after that. We do have Bob here. He's talking about the gold market, silver market, as well as energies, and Jeff's going to discuss the stock indices as well as the treasury markets. And of course, I'm here to give you an update in regards to the currency reaction after the Federal Reserve announcement at 1:15 today. So I think we're going to start off here with Bob.
Yeah, it was a wild day here as the day went on. Pretty quiet going into the announcement that came out, and then as Bernanke talked, we really saw some more moves in the gold market. You know, it's interesting to see right now with gold touched all the way up to 1775. It does appear, looks like it's probably going to try to take out that 1800. I would think maybe by tonight. And with his comments, basically leaving this whole program open-ended and not, laid their cards on the table. Everything's out there now, it seems like. Buying mortgage-backed securities, $40 billion worth every month. Who knows how long they're going to be doing this, how long it's going to take. Thinking the economy's going to get better in the short term by doing this, I disagree, but, I think there's more stuff that's going to have to be done. Who knows? But gold, silver, they'll go back on it. John's going to touch base on currencies, but I think common sense in this right now is you got a weaker dollar. You got Europe looks like they're easing as well too, although it's not confirmed. I mean, you got the U.S. easing going on. I mean, paper, money, flight to quality. I think you're going to see more flow in the metals right now. Naturally, just common sense, risk on. I wouldn't even call it risk on. I'd say it's risk off. People want to be in metals. They want to feel safe right now. Gold, $2,000 by the end of the year. Don't see that being a problem right now with what the Fed did today. I mean, who knows? Like I said earlier, who knows how long this is going to go on for? This could go on for a year. I hope not, but it could.
Let me ask you something. When I was watching the speech with Big Ben, as they like to call him, he was saying that we don't have any inflation and they're targeting 2%. We're definitely in their guidelines and they have no threat of inflation. I look at the metals and, you watch them very closely, but I think that the metals, especially gold and silver, are telling us that inflation is coming. Not really a safe play, but really, hey, we're printing money, and a month before we got involved with it, it started to rally, looking for QE3 coming, and sure enough, now he says we shouldn't worry. That was some of the big questions on the table.
Well, he said, he's said continuously, he said it today, and he said it in the past, I've heard him say, because that's always an issue with easing, is inflation. How's that going to affect the guy on Main Street who's got to put oil, fill up his car with gasoline, who's got to go buy groceries to feed his family? Common sense again is weakening dollar, and they say, causes the price of goods to go up. Usually they say inflation's tame low, but when they're measuring that, you got to keep in mind too that the measurements aren't necessarily counting food and fuel, the things that you absolutely need. Maybe they keep your house in there or the price of clothes, which you don't want your obviously house value has gone down, so they could say inflation is lower. But I think exactly. I think they say, I've heard them say it a couple times now that they're keeping an eye on monitoring it. I mean, they monitor it all they want, but when they open ended policy.
There was at the end of Bernanke's statement today, he came out and said longer term inflation doesn't appear to be a problem right now. I think that just kind of justifies the stimulus program that they're going to enforce moving forward.
They can justify it, and I'm not disagreeing with it, like you made a good point there, but they can justify it as much as they want with,
well, of course they'll justify it.
But at the end of the day, you're going to see, I think you'll see higher prices. Crude, I don't see a problem with crude getting above $100 here.
Silver
will continue.
I agree,
John,
100%.
Touch on what the currencies, how we saw play out.
What we saw today, the announcement came at 11:30, and then there was a conference at 1:15 with Ben Bernanke. I don't think we really saw any surprises today. Maybe the open-ended portion of the statement was a surprise, but for the past several months they've been talking about QE3. And they delivered today. $40 billion a month in mortgage-backed securities is what they're going to be purchasing on a monthly basis. They continue to say they seek to foster employment as well as price stability, but I don't see how they're fostering price stability by implementing these stimulus programs. I mean, you've got the dollar on the run right now. I looked at the dollar today. We were down. Last I checked, we were down about 60 points, trading 79.34. You've got a major risk-on event where investor capital starting to flow towards the riskier currencies. You've got the euro trading up over 130 again. when just a few weeks ago we were knocking on a $1.20. So in taking a look at the Australian dollar, that's a market that typically follows commodity prices and inflation, and you've got that market up 100 points right now, trading around 104.60. So
scary you touched on the euro. We were knocking on 120,
right,
and now we're up to 130. I mean, it's paper. I mean, where do we go? I mean, Europe didn't go away.
No,
Germany,
of course not. No,
the German courts kind of opened up the end for a
Well, you look at purchasing power, and the dollar represents purchasing power. And if it's on a slide down, then that means it takes more dollars to purchase a lamp or a tire or a CD or an ice cream cone. So in America, the consumers are getting less purchasing power worldwide. But I think looking at the currency market, and John can correct me if I'm wrong, it also means that consumers, when they go to buy gasoline or any of these goods and services, if inflation kicks in, if gold is right, these this QE3 that is supposed to help our overall economy, okay, might not be helping the consumer. Might be helping big banks. It might be helping the stock index future traders or investors. I grant you that. But as a stimulus to create employment, to create lower purchasing of or having a better purchasing power, I think that it could backfire on
Jeff,
that.
you got to keep that stock market up. So
Well, it is. It's been
well, that's
been
once
rallying
again
up a
we're in an
storm.
election year. I
No.
mean, how does this affect the elections moving forward? I mean, does this almost guarantee maybe another 4 years of an Obama administration?
it's too little.
Stock levels.
It's too little, too late right now. There's 54 days. I think it is to the election, and I mean, for this to even trickle down to get to where
Oh,
you
right.
need
We,
it to
we
the
won't
voter.
even feel it.
Yeah, you won't feel it. But you'll see the stock market, a 401k guy, will temporarily see that lift in his
Right, and they'll feel
Yeah.
they'll feel that they have more
When they really,
value. Okay, that their net worth has grown, and they'll feel that way. Looking at the
What
stock
on the
market.
equities, yeah, what do you think on that?
Well, in the stock market, we're up about 25 points. We're up 15% for the year. We're up 193 points for the year in the S&P. We've anticipated, like we talked about, so it could be buy the rumor, sell the fact. But usually in an election year, we do rally into the election. And at least we did last election in 08. So I would have to be very cautious after, if you weren't in now, I would be calling one of us to figure out where to get in when it comes to stock index futures. But we should continue. I'm looking for a pullback and then to buy.
I agree 100%.
Somewhere around
I think this could be the tail end of this rally. At least for the short term. I certainly think longer term the market is going to scream higher. There was a lot of reports out there that there were a lot of hedge fund managers that have missed a large portion of this move, and they're saying that you could have some hedge funds chasing this move right now. This could, like you mentioned, I think we can maybe consolidate sideways. You're probably going to see some profit taken up around these levels, but longer term I still think we move higher. So, it's all about trying to pick and choose your spots. Technical analysis, that's what we do all day long. Obviously I do fully expect to pull back the market, but it's getting in at the right time the next go around that's going to be important. So,
I agree.
yeah.
Timing's everything, and you're going to have to do your homework or call one of us and let us do our homework. As always, trading futures or option to futures involves risk of loss and is not suitable for all investors, all traders, or whoever. So be aware of that. I want to say thank you very much for having me.
Thank you.
You guys are quite good at what you do. Good luck and good trading.